Hi there, welcome to JS's Log. I'm your JS. From this week, we are going to start a series called Accounting to Financial Analysis. Okay, so it will start from the basics of accounting and it will end with financial analysis or fundamental analysis, okay, which we do for a company using its financial statement to know the absolute financial status of the company, right? So this series will be helpful for both accounting and non-accounting persons, and it will give an in-depth knowledge in accounts and finance for the viewers, we believe. In order to make it understandable for non-accounting persons, the content of this video and few upcoming videos will be of basic things of accounts. And yes, let's get into the video. And before that, if you are new to our channel, subscribe to our channel and press the bell notification so you'll get notification when we upload new videos. Okay, let's get into the video. So in this video, we're going to see a few basic accounting terms. In that, the first one is separate entity. It means the business and its owner are two different persons. So the books of accounts should consist the financial transaction of the business alone. Okay, that's what it means. None of the personal income, asset, expenses, etc. of the owner should not be entered in the books of accounts. So to make this statement stronger, in accounts, we consider the capital given by the owner to business as an individual is giving capital to another individual called company. So the company is liable to pay back the money when the owner seeks, and the company needs to generate profit for the capital amount invested by the individual called owner. So in that perspective, we are approaching and with making the accounts entry as well. Now you could ask, how can a company be considered as a person? So, as per law, an organization or company is an artificial person. Hence, we need to consider a company as an individual. That's one point. And for the sake of to get a clear financial statement of a company, to know the transaction financial status of the company, we need to enter the financial transaction of that particular concern alone, of that business alone. With that point of view as well, we usually opt with this method, okay, the separate entity. So because of this, when a company generates a profit, we enter it in books of accounts with the point of view of the company generates profit. When the owner of the company takes the profit to his pocket, we enter it in books of accounts with the point of view of the company gives its profit to an individual called the owner as it received capital amount from that individual, that is the owner. So apart from profit taking, if the owner takes some money from his or her company for any other personal reason, we need to enter it into the books of accounts with the point of view of the company gives the money back to the owner from the investment amount he or she invested in the business. Or we can also enter it in as the company provides loan to its owner. We can also enter that transaction in books of accounts like that. The reason for this point of view, like I already mentioned, to get a crystal clear, accurate financial statement of the company, which shows from where the company gets its money, what is its major cash source, what is its own revenue, expenses, profit, and what is the benefit or profit for the owner of the business, how many times he or she brings money into the business, everything. It shows everything related to the business transaction. Okay, so we can see the exact what's actually happening in the organization. We can understand the financial status of the company or the business. So this is the reason we use a separate entity, or in other words we can say a business and its owner are two different persons. For sole proprietorship, if you really want to know the financial status of your company, so you have to know the financial status, right? So for that you need to maintain a proper account, and in that time you have to follow this separate entity concept. Fine. And for other company types like proprietorship, or let's say proprietorship, private limited company, public limited companies, all the listed companies, everyone should follow this separate entity concept. Hope you understood the separate entity concept now. Second one is debtor and creditor. Debtor indicates a person or a company, okay? But which person or company it indicates? It indicates the company to whom our company sold goods or service on credit. So a debtor is one who borrowed from us, okay? So as they mandatorily need to pay the money to us in future, the debtor having a future value as well, right? So they borrowed goods or service from us and they will pay back in future means, so it will have the the value till the future, am I right? So it has a future value. Because of that, the debtor should be considered as an asset to our company. Clear? And the creditor also indicates a person or company, and it indicates a company from whom our company purchased goods or service on credit. Here we borrowed goods or service from someone else. So creditor means is the is the one from whom we borrowed, okay, and it will treat as a liability to our company, because in one day or another we have to pay back the money, am I right? So that's a liability to a company, so we need to treat it that way. Third one is asset, liability, expenses, revenue, profit and loss. So asset means a thing has a current and future economic value to a business, okay. So if you have a land and building, then the land and building has a current value, okay, market value it has, and obviously even after 5 years or 10 years, even 50 years, still it will have a value, right? And that's what it means. So asset means a thing has a current and future economic value to a business. So in that point of view, let's say some few examples of assets are cash, we can say, bank account, we can say, debtor, obviously in the previous point we discussed, right? So debtor means the one who borrowed goods or service from us, so we need to consider them as a asset, right? So debtor, and furnitures, buildings, etc. Fine. So these are the few examples. And liability means the company liable to pay back the money to someone else. Fine. So let's say loan, creditor, we know creditor is a liability, and the company's equity or capital. So here the company equity and capital, actually both are same, okay. Equity and capital mentioning the same. If it is an MNC company or a big organization, then the capital amount will be mentioned as equity. Fine. If it is a small organization, a normal company, a small business type, then it will be mentioned as a capital. Fine. Both are mentioning the same, and the reason it is mentioned under the liability side is we know the separate entity concept, right? So business and its owner are different, am I right? So the company has a liability to give it back and to generate the profit for the capital amount invested by the owner. So that's why they consider the equity or capital as a liability, okay. So these are all some examples of liability. Then expense means money we spend for our business, okay. So like we can say salary, EB bill, transportation expenses, wages, etc. okay. And revenue means the money we get from sales. Fine. And profit means revenue minus expenses, as simple as that. What does it mean? Means if you get a revenue from sales, then after deducting all the expenses, how much we have in our hand, and that is called the profit, the remaining amount. If it is positive amount, it is a profit. Then negative amount means it is a loss, am I right? Because if the revenue is lesser than the expenses, then obviously it is a loss, am I right? So it's a negative amount. So this is what it means. The fourth one is monetary value, okay. So monetary value means the value of any purchases, sales and expense of the business, okay. So we can measure the value using money. Fine. So example, if a company purchases a reception area table and it's cost rupees 15,000, let's say, here the monetary value is 15,000, okay. This is the amount we need to enter into the books of accounts. Let's say if we resale the same table, okay, after 2 years for second hand, okay, for rupees 8,000, let's say, then we need to enter this transaction in company's books of accounts as well. But what is the monetary value? Here the monetary value is 8,000, okay. After 2 years of usage, the value is reduced to 8,000, and that's for that price only we could sell that furniture. So we sold for 8,000, means the value of that furniture is 8,000. Fine. As simple as that. And one more example if you want, then I could say if a company purchases a security software, for example, for rupees 20,000, we received rupees 2,000 discount, okay. Let's say here the monetary value is 18,000. Fine. So, and this is the amount we need to enter into the books of accounts. Now I hope you understand what is monetary value is. Fifth one and the final one is financial transaction. A transaction means any activity inside the business. Okay, so inside the business, whatever the activity is happening, then we can say that's a transaction. But if the activity has a monetary value, then it is called financial transaction. Okay, so from the previous example, we can say purchasing a reception table is a transaction. Okay, so does it have monetary value? Yes, its monetary value is rupees 15,000. Then it is called a financial transaction. Okay, let's say we need to pay salary. Okay, salary payable or salary paid or whatever. Okay, both are transactions. Does it have a monetary value? Yes. How much we need to pay or paid, it is a monetary value, right? So then it is a financial transaction. So any activity inside the business, inside the business is called a transaction. Any activity, if that activity, okay, if that transaction has a monetary value, if it has a monetary value, then we can call it as a financial transaction. I hope now it's clear. But remember, in accounts, we should enter the financial transactions alone. Okay, please remember it. In accounts, we should enter the financial transaction alone. In another word, you can say none of the financial transactions of the business should be left. Okay, so it's very important. Please keep it in mind. Okay, and with this, we end this video. Next week we'll see some more basic concept of accounts in detail. And if you find this video useful, please feel free to like this video, and please let me know if you have any doubts in the comment section below. It's my pleasure to reply. And so see you in next video and see you next week. Bye.